T-10 to showtime. On my mark, roll intro and mark. Camera's ready. Camera 1 check. Camera 2 check. Audio. Roll guest package. Action. The views and opinions expressed in this podcast are those of the individual speakers and do not necessarily reflect the official positions of Visa or the speaker's employers. This podcast is intended to provide general information and should not be considered health, legal, tax, or financial advice. Todd, coming to you in 3, 2, 1, action. This is Policy Sandbox, a collaborative space for ideation at the intersection of payments, commerce, and public policy. On this episode, we continue our conversation on global trade, the growing regulatory pressures facing new, small, and micro merchants, and the practical policy fixes needed to make the system work better.
Digitization is enabling small businesses to become more competitive, gain new visibility in international markets, and internationalize. At the same time, there are a lot of new challenges that businesses have to deal with that kind of add to the variable costs of doing global business.
That was Dr. Kati Suominen, international trade economist and the founder and CEO of Next Trade Group. Kati explains how e-commerce and artificial intelligence have fundamentally lowered the barriers to entry for international trade. But as fragmentation increases, have well-intentioned policies created a system that is difficult for small businesses to navigate? Large multinationals have more resources to navigate volatility and regulatory fragmentation, but everyday entrepreneurs don't always have that luxury. To help us understand how we rewrite the rules for the digital economy, I'm excited to be joined by our guest, Dr. Kati Suominen. Dr. Kati Suominen, welcome to Policy Sandbox.
Thanks very much for having me.
So, Kati, you are the absolutely perfect person to share some insights with us. You study international trade as an academic, but you also participate in international trade policy as a founder and as a direct participant through your business. So, what challenges do you face, and what, if anything, can we learn about how small and medium enterprises navigate the international trading system from your own experience?
The opportunities for small business to internationalize today, I would say, are unprecedented, historically speaking. So if we look back, say, 20 years or even 10 years, internationalization for small business was really a long and costly process. So let's imagine you're selling products, which my company doesn't, but let's imagine you're a manufacturer. You would have to go to a trade show, you would have to travel to meet buyers, then you might get an order, and then you have to figure out, say, market access regulations. You may have to identify freight forwarders, orchestrate that export process. So in other words, there were very high fixed costs of gaining visibility with buyers and entering new markets. And this is why large businesses were much likelier to export at the time than small businesses. They were able to deal with these high fixed costs of market entry. Let's say 10 years ago, e-commerce and of course the internet really changed this. They reduced this fixed cost of gaining visibility with buyers. So if you think of a small business, they could get orders online through their online store just accidentally, without even trying. Somebody overseas might discover them, and they become an exporter that way. And I think we actually saw this in some work that we did with you, Todd, in Visa Economic Empowerment Institute, where some of the nascent women-led firms that we surveyed, that were just less than 2 years old, that were selling on online marketplaces, were already exporting around the world. So small businesses could leverage this e-commerce and internet-led economy to scale their sales. And of course, there were on the import side many more importers, because consumers could now themselves become importers and buy directly from small businesses without being intermediated by department stores or retail chains and so forth. So in a way, the addressable market multiplied for small businesses. And so, today I would say small businesses can be born digital and as a result can be born global. And they can also be kind of micro multinationals where they are able to diversify across different markets with greater ease. We actually found in a recent study that we did in Asia Pacific that 90% of exporters that had started to export sometimes over the past decade had been able to diversify just in the past 3 years to further markets. So we found also that businesses that invest in AI, say 5% of their revenue, are 1.5 to 3 times likelier to export and diversify their export. So really the digitization is enabling small businesses to become more competitive, gain new visibility in international markets, and internationalize. At the same time, there are a lot of new challenges that businesses have to deal with that kind of add to the variable costs of doing global business. The shifts in tariff rates or import classifications are making it harder for exporters to have predictable sourcing, for instance, and know that they are able to access markets in a predictable fashion. There is also this, I would say, greater scrutiny on where products came from and what the supply chains of businesses actually contain. So, companies need better traceability systems. And of course, there are sustainability related mandates as well, where, markets like the European Union, for instance, require companies to have better understanding of the environmental impact of their supply chain. So there are these kinds of new challenges for goods sellers. For services sellers, it depends which service you're selling. If we look at services like legal, financial, some other business services that are highly regulated, in those segments, businesses tend to face, say, licensing requirements or restrictions on cross-border provision of service or capital requirements, for instance, in the case of financial services. So again, these are raising the cost for small businesses in particular to break into new markets. And then is the new set of rules that are related to digital economy and digital regulations. These rules, such as data privacy, data transfer rules, consumer protection rules, say content moderation rules, digital taxation rules, now AI rules as well, AI regulations, are further complicating the export opportunities, both for goods sellers as well as for services sellers. So, we've actually looked at the rise of these digital regulations in the Asia Pacific region and discovered that the digital regulatory stock has grown 300% just in the past 5 years. And there's now 1,500 different digital laws and regulations in place in these markets. And now, not all of these regulations are clearly bad. They are there to protect consumers, ensure fairness in the digital economy, and things like that. But they do pose new considerations for businesses. And for instance, data localization mandates do hamper export-driven businesses because export-driven businesses are likely to export and import data, and they need data to ensure the competitiveness of their business to service their customers better. And these data localization mandates have mushroomed around the world. And we actually found in Asia Pacific markets that over 60% of small businesses that export say that they would score revenue gains of 10% or more in total of their total revenue if these data localization barriers were removed in their export markets. A further issue is the divergence of these digital regulations, the fragmentation of rules across countries that then impede the scalability of small businesses or startups as well when they have to deal with divergent consumer protection or data privacy rules, for instance, across different markets. Say in Southeast Asia, where there's been a tremendous innovation in payments, in financial services, the rise of dozens and dozens of new fintechs, we found that the kind of divergent, fragmented national licensing regulations, data transfer rules are making it harder for payment providers to scale across the region. And by virtue of that, small businesses that use these payment providers have harder time getting paid from their customers in other markets of the same region, because the customer may use another payment mechanism. And just solving for this interoperability of regulations, interoperability of payments, would unlock about $20 billion of new SME trade, generate maybe 2.7 million new SME jobs. So overall, digitization is creating these magnificent opportunities for small business to internationalize, but at the same time, we have new sets of regulations and regulatory fragmentation that have to be dealt with in order for small businesses to take advantage of this digitized economy.
A 300% increase in digital regulation, that's a lot. What, if anything, can a small business that wants to participate in global trade do to stay competitive in a world where this just huge proliferation of new public policies just must be overwhelming?
It's challenging for businesses. At the same time, they are able to certainly leverage, global networks like Visa. They are able to leverage logistics suppliers that are much more digitized today, for instance, in the area of freight forwarding. So there's this ecosystem of marketplaces, logistics providers, payment providers, fintechs as well, that enable small businesses to transact more easily across borders. At the same time, I would say, trade policy would need to improve and come to the era of kind of AI-enabled, digital money-enabled economy to support small businesses. And if there's one thing I would say would be an important fix is to reduce this fragmentation of digital regulations in particular that make it difficult for today's digitized, otherwise scalable companies to diversify across markets. And of course, economies are seeking to make a difference in this area. So we have seen an explosive growth of digital trade and digital economy agreements, particularly in the Asia Pacific markets, that seek to align countries' regulations in data privacy or consumer protection, or reduce data localization mandates, for instance. So the CPTPP in Asia Pacific really started this wave, and there are many more agreements ever since. In the Americas, we have the USMCA that has a digital trade chapter, a very forward-looking chapter. And then Southeast Asian countries are, of course, negotiating a digital economy framework agreement, which would have a relatively similar template, as I understand, to those of CPTPP and USMCA. And furthermore, African countries have made a lot of progress, right? So they announced the African Continental Digital Protocol that is also a very forward-looking digital trade agreement. So progress has been made, and this supports small business, but I think we need to go further. We actually saw this thought in the research that we did together recently on kind of fragmentation of international trade, where we saw that the number of different trade corridors has grown dramatically. And so this just indicates to me that we need something more to jolt the trading system and also open those opportunities for small businesses to diversify further, create new trade corridors, and engage in trade with further markets, new trading partners as well.
Yes, just to dig into that research a little bit more, I think what your research found is that there was this era 15 or 20 years ago when it seemed like every country was just trading with everyone else. And what's happened in that more recent period is it's just kind of collapsing into some big, thick corridors, but you're not seeing that spread out trade where small countries on opposite sides of the planet are trading. But I think the key takeaway is this point you're making. It doesn't really matter if I sell all of my inventory to 2 countries or if I sell the same inventory to 10 countries. What matters is I'm finding a buyer somewhere in cyberspace, and I can trust them to make that payment securely
This diversification certainly of corridors and markets matters because it builds resilience, right? Businesses will have options in terms of their sourcing, in terms of their markets to sell to. So we actually found in this study also that businesses that had diversified and countries that had diversified their trade corridors and that had diversified their flows rather than concentrating their flows had grown their exports faster than those that had perhaps concentrated their flows even if they had diversified their trading partners. So diversification is positive from that point of view. And also what we discovered in that work is that in many corridors, even if they were active, the trade flows were actually declining. So there was less dynamism in the existing corridors. Perhaps some of this is related to bank de-risking as well, and that relates then to dealing with financial regulations as well to enable financial regulations to be more interoperable, to enable cross-border payments more easily.
We're almost out of time. Another area where you have done great work and where we've been proud to partner was in this idea of how can we design policies that are just more fit for the needs of these growth corporates. They're not startups, they're big companies, but they're not at enterprise scale either. But maybe just to end the conversation, Kati, what, if anything, can be done to help these growth corporates, these middle market firms?
If small businesses need support in kind of becoming global, these middle market firms need support in scaling globally. And many of these middle market companies are already exporting. They are already managing, multiple suppliers in different markets. They are serving exacting, demanding customers. Their trade operations are more complex, more elaborate. I would say more kind of multi-market than those of small businesses. And they face this challenge of managing cash flow, right? They buy from suppliers around the world, and then they have to wait to get paid from customers at home or abroad. So working capital emerged as an important issue to ensure that these businesses are able to keep accessing suppliers and manage their supply chains, and also, of course, respond to supply chain shocks, reduce their lead time to be able to service their customers. So these growth corporates actually cited themselves in visa surveys that the cost of accessing working capital and the approval processes were a major barrier for them to manage their international operations and global supply chains. So that's one area. I would say also, I think we need kind of a new digital trade agreement template as well. And we are actually working with some of our clients on such a template, and that would build on the existing successes that there have been with agreements like the CPTPP e-commerce chapter. And so I think there are 5 things that are needed for a new digital trade agreement. One is to create kind of common interoperable rules for AI and AI-enabled services in areas like application of common international AI standards, promoting risk-based AI governance. The second is exactly what Visa is all about: promote that interoperability of digital payments and non-discriminatory access for payment providers to new markets, so that in markets like Southeast Asia, the many payment innovators are able to service multiple markets with ease. Third, we need to do a better job in ensuring and enforcing the data transfer regulations in trade agreements that promote fluid, trusted data transfers, so that small businesses are able to move data, and middle market businesses as well, are able to move data across markets with ease, and that countries actually meet their obligations under trade agreements to ban data localization and promote data transfers. Fourth, there are these new local content rules and discriminatory procurement practices also that have emerged alongside industrial policy in many markets. And I think the new digital trade agreements have to focus on this, particularly in procuring digital services, so that we have non-discriminatory, fair procurement practices for governments to procure digital services from around the world. And then finally, in light of this proliferation of digital regulations, it's very hard for businesses to keep up with the tripling of digital regulatory stock around the world. So we need kind of instill good regulatory practices in trade agreements, ensure that countries conduct regulatory impact assessments, ensure that comments from businesses to regulatory changes, for instance, and this kind of process of creating new digital regulations can be so much better. So I think these kind of fundamentals would go a long way to supporting both small businesses to break into new markets and enable the middle market companies to have a more stable trading environment. And of course, we need less volatility just in the market access barriers that affect good sellers.
What's so interesting, though, is I think a lot of these arguments are being made in their own silos and not necessarily in a way that links the benefits to small and medium enterprises. And that's so important. The big winners from getting these policies right, it's not the large enterprises that already have the benefit of a global trading system that was largely designed around them. It's the people that have been left out up until now. They finally have their chance to have a seat at the table. We want to make sure that they take that and that it's a permanent addition to global commerce, not a one-off. So Kati, we've come all the way to the end of the interview, and I've been so tempted at various stages to jump out and just remind the audience just how long we've been friends. But I can't conclude without just acknowledging I certainly wouldn't be where I am as president of the Visa Economic Empowerment Institute if it hadn't been for you coming into my office 25 years ago to actually interview me for a book you were writing. At that time, I believe it was on the role of rules of origin in international trade agreements. When we created the Institute here at Visa, the goal was to really bring in a lot of the ideas that you've really articulated in your writing over the years. So how can people find more about your writing and your firm?
Thank you very much. Well, I mean, little did we know 25 years ago that rules of origin would still be a topic today in 2026. I myself thought that we would have global free trade by now and rules of origin would be obsolete, basically. But quite the opposite has happened. We've had a number of studies that we produced there on the VEI site. So I think people can find some content there. Of course, on nexttradegroupllc.com site, there is more thought leadership and research as well on some of these issues that I was speaking about just then. And, of course, I've been a fellow also with the Center for Strategic and International Studies for several years now. So there's some content there on international digital regulations. And here and there, I teach at UCLA Business School. So, to my benefit, learning more from the students that they would ever learn from me. But it's another way to keep fresh and understand where business is going in today's digital economy.
Well, Kati, you've never been my professor, but I feel like I've learned more lessons from you than anyone else. Thank you for everything you do to help drive economic empowerment through open markets and digital trade. It helps small businesses, and it really does improve the state of the world. Thank you for joining me on Policy Sandbox.
Thanks so much for having me.
That's it for this episode of Policy Sandbox, but I'm already excited for the next episode and yet another fascinating conversation to help us all understand not just what the next era of global payments will demand from us, but what it can offer us as well. So please do come back and dig in with my guests and me in the Policy Sandbox. For more insight and practical advice from the Visa Economic Empowerment Institute, please be sure to visit us at visa.com/VEEI.